habits that you need to break yourself from if you want to speculate. Get right back to
Now, if we take a look
ineffective
at, like I said,
speculators.
his name
Other thing they do, they buy cheap stuff. I'm back,
Why is that?
and I got 5 more bad habits that you need to break yourself from if you want to speculate like a pro. Let's get right back to ineffective speculators. Other thing they do, they buy cheap stocks because they assume every
cliche is that if you don't
natural
learn
gas,
how,
those are not
you're
specific, right?
bound
You're not
to
just saying
repeat
those
it.
are
Let
natural
me
resources.
take you back
So
a
with
little
everybody,
bit.
and you now have the Bank of
Essentially
Japan,
between
Bank of England, America,
1914
Chinese
and
apparently
1920, we had
loosening up
Bank
everybody
Composite
is now
double
loosening the
so
money
we had
supply, printing money.
Hi, I'm Max Kaiser. This is the Kaiser Report.
We also had a relatively low discount interest rate where banks borrowed from the federal government. It was a lot more important back in the
Shortages of nearly all commodities developing and I'm going to make money in the commodities. If the economy does get better, print a lot more money, place to be, and we'll have
I was just saying, I told you this has been happening for weeks. All we do is search stuff online. And we use several different search engines, but start page stuff just processes through. And if someone in the room is watching us, right, we hope that you equity watching us, learning that they're being poisoned by our searches, not give it saying they're killing us. Of course they can't have me on air dominating. And I'm dominating all of the web now. We're being censored everywhere.
Everything in the world
I have confirmed that people are
maybe the US dollar will go up initially, but probably everything would be hit in the shock that made the world. So I own gold. I'm not selling my gold.
The crash of Lehman Brothers. It was topic discussion on my side of the former chancellor.
And what the Fed is doing is simply guaranteeing that
most people don't understand
the 0% interest rates prevent.
And perhaps you know Venus Project, you know the Free Gold Charter organization, you know perhaps the books and the stories of Gene Roddenberry, Star Trek, where we live in a world without money. I can tell you it is possible. But the problem we are facing is how can we get there? And all that we have to know is it happens in our minds. We have to push the right switches and then we will find the path.
Okay, guys, once again, hello to my FM Signals info show. My name is still Damir Galch from good old Germany, and you're welcome to another 48 hours technical analysis and synthesis. No, not today. Today, I want to give you an ZenSerious commentary of a scenario. Even for financial market infos, even in financial market infos for proactive speculatively investors. By the way, many traders sent me an email, asked me what I'm thinking about the equities, and I'm thinking today or tonight, Central European time of course, 6 March 2012, after a little bit heavy loss today. I want to give you my opinion even about the equities. By the way, I'm not trading equities anymore, not following day by day. Of course, day by day I'm watching TV, Bloomberg, CNBC, etc., and following the equities. But my focus is still on the 13 currencies, even 78 cross rates. Okay, by the way, let's come to a point, to the themes today. US equities, Dow Jones, Nasdaq Composite, S&P 500 and S&P financials. I want to give you about the Dow Jones and technical analysis and synthesis on weekly time frame. The same stuff, Composite, Nasdaq Composite and S&P index. And S&P index, I want to give you also an historical development in all our 13 currencies. Also interesting stuff. And all about that, I ask myself, is it worthwhile to invest more in S&P financial sector? Even the S&P ETF financial selected sector SPDR. I want to give you also a technical analysis and synthesis Okay, that's the themes for today, or the questions what I want to answering. Yes, here by the way, FM Signals, my blog, YouTube, Twitter account, real-time charts, where you can get day by day. Twitter account I will twittering not this week, next week, also not, but the week ahead, then the over next week, and YouTube also next week. You will get FM Signals info show videos. Okay, guys, so let's get started. Okay, and we see here the Dow Jones Industrial Average Index all time since 1900, so through the last century, even before the Fed was created here, if I'm not wrong, 1912, 13. However, here we see the Dow Jones Industrial Average, and what's important are these two scenarios here. Well, after the World 20s, the swing 20s, here we've got a big crash, World War I, World War II, here World War II, and yes, and then this rise. The second scenario here, the problem was economic and high inflation. Economic and high inflation was, and also government state debt. That was the three big issues of the crisis there. Then we've got here also something like a crisis on sideways trend in the 60s, 70s, and here was also inflation and higher commodity prices. And by the way, here in the last 10 years we've got the same stuff again. Government state deficit, economic crisis, and higher inflation. Here commodities, and here this stuff again on a higher level, of course. So of course the history is not the same, but a rhyme. Yes, but it rhymes. How to say in English? Yes. Okay, and we are right here right now. And this question, the question is, of course, will we get managed the crisis, or not we? So we are market participants, the politicians and the central bankers and the governors, or not? And that's the name of the game from the total perspective, from the historical view, by the way. Okay. Good. Come to the weekly time frame. Here we see the last, the high here, perhaps here also once again, and here come on the weekly time frame. Here the high 2007, the lows 2008-9, and the 52 moving average. And interesting in this case is, of course, that we've got here something like 2010 and 2011. Around about the 52 moving average, and yes, it was after MAP, of course, a great trading capability to buy, also end of last year, and we are here right now around about the highs of last year. Here, by the way, the time frame, Fibonacci lines on the time frame, and the price area. Okay, so, and the question is, of course, was this day today? So we opened above the highs of last year and closed down under. So I'm thinking, I'm accepting we are here in a something like an, how to say, consolidation here about the highs of last year. And interesting in this context is, in my opinion, here we've got the consolidation here. The last consolidation last year was on the last Fibonacci line, and here on the time Fibonacci line we've got also a consolidation. So I'm accepting here in the Dow Jones, from technical view, of course, something like a consolidation. So I wouldn't be surprised if we're falling back to 1200, and then could be a buy opportunity, in my opinion. Today, 6th March, Tuesday night, of course. Who knows what will happen? Important is, of course, the Greek saga. I'm thinking it will come to an end in this, or timely to an end. Haircut. We will see what will happen this week and next week. And by the way, that will be a trigger even to buy or to sell equities. So if the markets be thankful and saying, okay, this problem is delete, or the solution is okay for next time, we can see much higher prices in this year. So, and if not, we will see. However, I would take the high of last year as a trigger. For example, perhaps also the 30,000 line. Yes, here not the high, 12,928. Also the 30,000 line, and take a trigger to go long or short even in the Dow. Okay. Here the Nasdaq, the same stuff. Nasdaq looks quite more interesting. Perhaps I should, here we see the highs and the lows, and for me, from the historical view, here we see, I would, okay, this was a very extreme high and low. Here high low, so I would simply delete this, cut this out, this time frame, and would create the Nasdaq since the lows 2000 and 2008 for would make a technical analysis for itself. So I don't think that anybody has here tickets shares from them, and yes, so I would make an analysis even from this point here. So, and when we see this, we see also here the 52 area, 52 moving average, also the sell-off here once again, buy opportunity, and we are here above. We are above about the highs 2011 and 2007 also. So we've got enough space, in my opinion, here for the Nasdaq, and the Nasdaq looks very good. I'm very proud, very good, very good. Yes. So I would, in this context, I would give the Fibo lines also not so much implications. Yes, so much. So by the way, here if we analyze the Nasdaq from here, A, B, C, we could have here somewhere wherever a D. So the Nasdaq looks from a technical view very good, but economic issue, Greek saga, etc., stay aware. But from a technical view, it looks very good. I would take the highs from 2007, here 2,861 as a trigger, and yes, Nasdaq. Very proudly, very good buy opportunity, in my opinion, still. So Dow Jones no today, Nasdaq yes, but all in all, let's get a view about the S&P. So, and the S&P looks also very interesting. So analyze this stuff again, it's still yours. Here the historical view. So okay, and here the buys. Here we see also the lows, the highs, and interesting is here, in my opinion, the Fibo lines are here on the times price area. We see we are above the 61.8, so we've got here enough space on the price side. Also created here an consolidation about a 52 moving average here, down under. And interesting is here, if we create here the upside trend since 2010 summer, here we lost this week. So very interesting view. Here we see this upside trend, here these 2 points. Summer 2010 was the turnaround, and the question is the upside trend since July, August 2010. Ergo, of course, here 2000 in March over. So very interesting. So this week perhaps we will fall back. Two scenarios in the S&P, so very open, quite open. I would watch the S&P this week, next week. So here the trigger is, in my opinion, the 30,170.58, the highs of 2000 of last year. And today I'm very disappointed from the S&P, so I asked myself last week, as many traders asked me what to do. I watched this upside trend, so and I hoped that we this week, I hoped last week that we perhaps this week break through, and then I could give you an buy opportunity, but now the markets are doing what they want. So today I'm saying, or tonight, who knows what will happen next week, what week or the over next week with Greece, etc., and I would staying aware, but I would take the highs of last year as a trigger. So we will see what will happen. And from timeline here also indicators interesting time zone, the over next week 2312. So here was a consolidation. Perhaps we will see this here again, and the target should be, if we get a solution in Greece and the markets are taking the solution as a good thing, then I would still accepting prices here in this area. So, and this are here above highs from 2011 and between lows 2000, highs 2007. So yeah, I don't accepting here so much raise like here. So here perhaps. So, but who knows how will Greek end? And the question is, of course, will the markets then playing the another CHIPS states, even like Ireland, Italy, Portugal, and Spain, and then we will have pressure again. So stay there, following the news flow, and following the news flow, and see the reaction of the market. So these two impacts will have, in my opinion, very much influence in the next weeks, and will show us the way, in my opinion. Here or here again. Okay, guys, that's all for the S&P. By the way, let's get a view the S&P in another currencies. Here, for example, the ZAR. Here we see we are here roundabout highs. If you are a trader from Capstad, JBorg, we see we are here roundabout highs 2007, more or less. Here in Russia, we are also above. From Moscow, for example, of course, here we are also above, nearly here 2080, 99, of course. Here we are above, under 99, above 7. So interesting fact. Here we see New Zealand. Here the lowest 2010. Here 3, 8, 10, and here we are right now at this price action. Here the Jan, the lows 2008. Here 11, nearly 2002, 3, but here also from breakout, so it could be interesting. However, okay. Here we see the Indian Rupee. Oh, yeah, I've got problems with the multiplication here, and we see Indian Rupee in the lows, and the highs of 2007 we broke we are here in a very good position. Here we see on the right side. Here, very good position. And here the highs of 2000. So it also looks very bullish if you are a trader from Mumbai or India. Here pound very proud. Here we see from London the highest 2005, 6, 7 here, and we broke this. We traded last year above and now back again on a very bullish trend. So from London here the lows and the highs. So okay. By the way, here euro also lows. Here the highs is enough space if you're an investor from Europe, and here also above the highs. 2010 was the high, 10, 11. So even a sharp low if you bought last summer from Europe S&P index, for example, ETF or securities. A very great race. Okay, here by the way the yuan not so much. It's not so volatile. Dollar yuan, of course. So don't need to talk about this rate anymore. Here the chief also very interesting. 2010, 11 or 9/11 here, and here the lows 2003, and here the highs 2009, 10. So it's enough space for higher prices if you're an investor from Switzerland. Canada dollar looks very constructive, progressive. Here breaks out, enough space, time for higher prices. So the S&P in Canada dollar also very interesting. Yeah. So. Real, oh yes, something wrong here. Also above the highs last year. And the question is, of course, is this an indication for bullish equities in the US dollar? I don't know. Perhaps we will see. Much more implication will have, or influence will have, the decision in Greek A and Z, the reaction of the market. And here the Aussie dollar had not so bullish like the another one. Quietly sideways trend. Here under prices since 2002. Also interesting fact. So very low area. The S&P and Australian dollar. Okay guys, these are the technical analysis. Okay guys, before we starting with the S&P banking financial services sector, let me explain you some basic facts about banks and equities. So here, by the way, I'm painting here simply sinus and cosinus waves. Here the sinus is the symbol of bear trend, if you want. So falling markets, and cosinus for rising markets. And interesting is, of course, the fact that even in the last two rises, 2003 and 9, even as the equities rises, the bank sector was yes, most interesting, or not the most one, but it was the time to buy banks. Why? Even the banks are the pre-indication of the economy, of course, lending money, and the equities are even a pre-indication for the economy. So yes, that's the solution, or the conclusion, how to say in English. Yes, conclusion why banks are even here. It's the time to buy. So if you're thinking we are standing before bull trend, 1 to 3 years, then I would, or you should buy banks at once for the first time. Then here another financial services and insurance, and here of course selling. Even course if the market, okay, Gesamtmarkt, ist mein German, how else? However, here and if we are in a downside trend, so banks, financial services, insurance papers are also high beta and falls much more. So it's also a question what you're thinking. We are standing about before an upside trend or downside trend in the equities even, and then it's the question even to buy or sell this sector, financial sector, of course. That's the name of the game, of course. Even based on the fact on the last upside trends and downside trend 2003, 2009 in Euro stocks and S&P. Yes, this is based on these two facts, two equities markets. Okay, why I'm choosing the S&P? Here is it. Of course, S&P ETF. Here I'm choosing the S&P ETF Financial Selected Sector SPDR. Here we see the chart, and why I'm choosing this chart is even the fact that we are currency traders, paper money traders, and that's the nearly sector in the S&P, of course. And by the way, we've got here in the last years even support from the Fed, QE1, QE2, and Operation Twist, how to say, yes, here. And yes, I don't want to explain what it is, thinking everybody knows. And important for me is much more the fact here, I'm paid in QE1 was a heavy support, the market reacts well, even as the Fed wants. Then QE2 also, but not so one here in summer. I'm thinking in Basel, or no, in Jackson Hole and then Basel. I'm thinking the central bankers decide then QE2, then comes out also support, but not so much as even QE1. So we've got here, if you want, you can pay in here something like a button. Yes, and here we was also here last year in a downside trend. So and then Mr. Bernanke decide even how to say Operation Twist, long short yields transaction, and it was quite nicely smooth, of course, and gave the financial sector even support. Of course, the question is what should occur is very critical. Much traders are very critical about this action of the Fed, but what should the Fed do? Even let the banks fall, or even yes, let close some banks or close themselves. That's monetary policy. I'm thinking Bernanke don't wanna close some banks, don't let some banks fall, even close the Fed. And yes, and if he thinks like I'm thinking that he's thinking, yes, of course, then I'm thinking yes, that's the best what he can do. QE1, QE2, and Operation Twist, very, very sharp, nice and smooth. And we see here the reaction. So it's a support. I'm thinking yes, the central banker Bernanke is even thinking like an insurance institute, even for the financial sector, of course, and or even a reinsurance for the whole financial select sector, or even a hedge fund manager if you want the hedge, the last station, or the how do you say the yes, the last station here in the financial system, of course, in the US. Even the point is simply let the banks fall, create new banks, close some banks, open some new banks, or even support the banks, giving even lower securities and time, and that's it. And that's the target I'm thinking for Mr. Bernanke. Okay, of course he's a political. He makes monetary policy. He will never say it so clear like I am. It's also my conclusions. I don't know if he's thinking like that, but it seems like. So it seems like. And what should he else do? By the way. By the way, I've got here a picture from Glassman, Final Art. Glassman management.com, you can get it here, and here's the great picture was characterizing even the situation of Ben Bernanke, the economy, or perhaps I would here add the banks at first. Then here I would add the banks at first. So the banks give the economy credits, and then the industrial productions, and then the wholesales, and then the consumer. And if everything right, everybody, so the industrial production and financials and the service sector could sell and produce, and they have more orders. They can even hiring some people, and then the people are even have good jobs, more money, and so what, and so the here even the economic raise up. I think that's the point. That's the target of Bernanke. What else should he do? Rhetoric question. If you know it, write it, put it, publicate it. So, and yes, how else you will solve the crisis? So the prices, of course, lower interest rates, higher inflation, boom bust scenarios. So, and here a desert yield, sweet yields like in the desert. So, and that's the price. You can even Bernanke's second name is Solomon, and yeah, that's the Solomon problem. You can get you can, if you know what I mean, you can yes, you can get a solution where everybody is surprised or is sweet by this. So for someone it's even bitter, and for another one sweet. So he's got to try to put all together in a context, even like Solomon. If I'm not wrong, I think Solomon Bernanke, his name is, and he can even show us what he can. And he showed it, and he showed us that he can, in my opinion. Once again, here he supports the financial sector, of course. What else should he do? Even let them fail, of course. It's a monetary policy decision. Even let them fail, let some banks fail, or even like then when was it, 95, 93 in Sweden. You can take the bank sector, even like GM in America, on a state hold, even of course the whole Fed if you want, and then sell it in the private sector back. But this is policy, and not the point to talk about this. So even from this perspective, or for the motive that Bernanke would support the system, of course. And here it's the best what he can do, QE1, QE2, QE3, and yes, hoping even that the hoping that the economy still starting to grow, and it seems like the unemployment comes a little bit lower, and it seems like that the economy will grow, and we will all get what we want, even higher income, higher prices, higher growth, value, etc., etc. Interesting. By the way, so if we are talking about here QE, okay, that's all for QE. Let's get a view about the banks at itself. Here I'm creating the total assets and the profit and loss account, assets, liabilities, expensive income from the banks. Usually how I learned in Germany, of course, not at bank. I'm coming from the retail sector and learned it autodidactly. However, here we see the assets, liabilities, expensive and income. And the problem of the banks are, of course, here the total income. So it's not enough. Even and the crisis and the problem is here in the orange, the interest income, current income, income from write-ups, another operations income, external income, and net loss. So they need support. And even Mr. Bernanke even give the support here, even with QE1, 2, 3, and how he does this. Here, let me shortly explain. Here, he tried to put up the liabilities of the banks. Here, it's very technical, very desert stuff. I'm hoping you can understand it. However, I tried to give him very cheap liabilities, and here even to get assets in a green line, of course. So. Okay, here I've got a picture. Sent me even a trader asked me here in German, a German picture of a doctor, did you have some nice steroid hormones for me, steroid? And the doctor here said, even Dr. Ben if you want, what you mean with nice? I can only cheap. And that's the point even of QE. Here, QE1, 2 and operation twist. The banks need cheaper liabilities here in the assets, in the total asset of a bank. Example for X Bank and Wall Street need here cheap liabilities to banks, to clients, security debts, in this case to the Fed, and so can even make money, even have a better income, total income, and then even landing their total income even to, so even if they have got this cheap water, cheap money, even to the economy, to the producer, wholesales, retail sales, financial sector, and they hiring people, selling new products, and even the whole economy grows. So that should be the target for the Fed, or is the target. Of course, Mr. Bernanke don't explain it so like I do. Of course, it's not his job. He's a political, he's also a monetary political leader, of course. So I don't accept him this one. Yeah, and that's, yes, it's my job. It's perhaps my job here in my FM Signals info show. Okay, so we will see what will happen. I'm thinking that's the target. Of course, I really don't know what he wants. Who knows? But in my opinion, I wondering what he's done here last year. Wondering was surprised with Operation Twist, but as long as I'm thinking about it, from his perspective, yeah, what else he should do? Even let them fail the banks, let them crash, close some banks, or close the Fed. I'm thinking that's not what we want. So we create Operation Twist, and very nice and smooth, even with the target, unspoken target, of course, 101, of course, unspoken target here, even for liabilities to push up the income, even about the liabilities to bank clients and security debts. So here's some background infos for all traders. Perhaps interesting for you, perhaps not. However, analyze the stuff again, it's still yours. Here the whole total assets and profit loss accounts together once again. Okay guys, here's the S&P ETF Financial Selected Sector is PDR. You can get it also on Yahoo, and the data I get from Yahoo in this case. So yes, interesting S&P index, and it looks very great in my opinion. So after the background information technical, let's come back to the future with our technical analysis synthesis here on weekly time frame. And here we've got the high and the lows. The high 2007 by something about 35, the low by 6, here 5.99. So very sharp following fall. Here we see what the hell is this? One moment. Okay, so I've got here the QE2 on the wrong side. However, here we see the highs, the lows, the Fibo lines, and we see here we are trading here something above the 23.6 and 38.2 lines. And interesting is we've got here a very long time frame. Long I see another one, and we are here on the last Fibo line. We're creating here something like an how to say, like an time frame, space frame here, and how to say, reverse formation. So, and here we are still rising after last year. So after last year we're rising, and we broke here once again here the upside trend from last year. So very interesting in my opinion. So okay, let me explain here. These lines are the QE lines, QE1, QE2 and operation twist, so A, B, C. And I'm creating here end of 2012 here D. So if QE1, 2, so QE1, QE2 operation twist works, and put it perhaps in a technical view together here, then we could have until end of the year even new highs above 2010-11. So here we are still in upside trend, and if we are zooming this, so here we also broke the 52 weekly average, the downside trend from last year. So very the best opportunity in my opinion. So the best opportunity in my opinion, and that suggests to me, as I'm saying, that suggests to me even perhaps we are in this one. Here the banks are rising, financial sector, perhaps we are on a, I don't know how long it will go, the upside trend. Perhaps I'm seeing too much in this, but it looks very great. So here, so and if you're remembering, the S&P, Dow and Nasdaq is much higher, so it's enough space for the banks. And remembering, we've got the hedge here from the fundamental view, from the liquidity side, from Mr. Bernanke, the Fed, and in Europe also from Mario Draghi. So even perhaps could this even put us out of the crisis. Of course, 2009 I thought it was a great idea, 2010, but yes, Bernanke and another one and another central bankers even don't want to let some banks fall, and the price is even lower prices, lower securities and a longer time. So I don't accept here much higher prices here like in the next years, but yes, perhaps new highs. Perhaps we need 1 to 3 years that the banks, even that the stereos are working. By the way, I'm remembering, yes, 2004 I was 25 years then. Yes, as I was young, I always wanted to go in a bodybuilding center. I had 70 kilograms then, and then I also bought some steroids, legalized aminosyre, creatine, and yes, and vitamins, and yes, also pump my body up, and it works with the especially technique I also learned, by the way, 1 year before how to get this. And yes, after then 2004 or 4, 5, 1 year, 2 years, I've got 30 kilograms more. It was even around about 50% more than I've got before. So what I want to say, with the right scientific methodology, you can get what you want, and perhaps Dr. Ben will will get serious and create and support the financial sector, even the economy. Or perhaps is this what I'm saying, wishful thinking? Yes, we will see how it will end. We will see. But that's the name of the game, in my opinion. And by the way, here QE1, QE2, Operation Twist, A, B, C, D. So I would accepting here higher prices, and if you can, I would, if you are interested in equities, I would here. It's also a trading capability to buy the S&P ETF Financial Selector Select Sector SPDR, by the way, or even the futures, of course, Dow, S&P, on Nasdaq, by the way. So very interesting fact. And that's all, guys, traders all around the world, my opinion for the equities. So it looks proudly very good. Here we see 1, 2, 3, 4, and the target should be here, of course. But the most fact, of course, today we've got a low day, or yesterday, now it's Wednesday European time, we've got a low day, so don't be surprised if we are falling the next days, weeks, until we've got a solution about Greece, and then we will see how the market reacts. So the basic fact, the basic signal, in my opinion, is what will we have a cut 75, 85, 95 cut for Greece. I'm thinking they need so big haircut, and A and C come to a point is the reaction of the market, and if everybody signals are good, then I would buy the equities. But I don't know how long or how much the price will rise and how long that will be. Even cause yes, if we are here, Greece solution is okay, then yes, we will rise. Will the markets be bullish? Reaction of the market be bullish? Okay, we can buy. Or will the markets then say, okay, wait, we create Greece and the next one? Then we will get here Italy, Spain, Ireland, and Portugal, by the way. So we've got another crisis. So even A, the fact, and B, the reaction of the market. So it's very confused, I know, but yeah, that's the name of the game, and we will see what happened. So come to an end. Is it worthwhile to invest more in US equities? I would say temporarily no. Yes, but take a stop, or even quick make a short side. Unless the stuff again is still yours. And is it worthwhile to invest more in S&P financial sectors? I would say definitely yes. Even cause if you are thinking that QE1, QE2 and Operation Twist will working, and if you're thinking the economy, if you're more pessimistic for the economy, then I would prefer to buy the equities. If not, if you're thinking we will play next another chip states in Europe, then it will be also a Damocles sword all around equities in the Northwest. However, analyze this stuff again. It's still yours. Thank you for spending your time watching my video. I'm hoping you've got new views, you heard something new, you saw something new. Best wishes from good old Germany, and talking to you next week. Not this week, yes, next week, with my usually FM Signals info show videos, even for